on a holiday-shortened week, Carol Massar, with stocks not really doing much of anything. We'll just call it unchanged on the day for the benchmark S&P.
It feels like finally investors in the market got the message that it is a holiday-shortened week and we can take a breather. But I do think, again, we're kind of waiting for what is next. But we're also like, let's not forget, we're in the middle of the earnings season. We've got a big one coming after the close. We're talking about Netflix.
Yeah, the Dow taking an outsized hit as a result of United Health shares just cratering today. But the S&P 500, it was as high as 1% earlier in the session. It was as low as 0.4%. But as you said, really doing not a whole much of anything right now.
Yields are moving higher, although, even with them moving higher, it's still a long way off from where it was at the peak of last week. So we kind of head into this weekend breathing a deep sigh of relief, waiting to see whether there are any headlines tomorrow or Saturday, especially after today's, I was going to say Tweet Fest, but Twitter.
Oh, no.
That brand no longer exists.
No headlines can come on Friday or Saturday or Sunday.
Do you think?
No. We're on vacation.
Not from this president.
Long weekend.
Long weekend here. I mean, we talk about this idea of whether investors are truly looking for bargains. Andrew Sliman at Morgan Stanley Investment talked about this just a few minutes ago on the Bloomberg Network. Look, we're still at a 15% drawdown on the S&P 500. So if you believe there is some long-term optimistic story for the U.S., maybe you do take advantage of these dips, like some of the ones that we've seen over the last few days. Here are the numbers on the day as we wait for those Netflix earnings across the wire any moment now. A Dow Jones Industrial average lower by about 1.3% on the day, and that's going to be a drop of about 3% over the 4-day week. The S&P higher by about 0.1% on the day. The NASDAQ Composite and the NASDAQ 100, we'll just call it unchanged on the day, though a slight tilt to the downside. In your bright spots today, the Russell 2000 up 0.9%, Dow Transports up 2.4.
All right, folks, S&P 500, most names in the index actually higher today. 384 Scarlet to the upside, yet 118 to the downside.
All right, and a quick check on the IMAP, the 11 sectors in the S&P 500. You have 8 in the green, 3 in the red. The decliners are tech, healthcare, and communication services. Leading the gains are energy, consumer staples, and real estate investment trusts.
All right, quick, guys, as we await Netflix, Eli Lilly, one of the big gainers today, up about 14.5%. That after it showed its experimental weight loss pill worked, as well as the Ozempic shot, bringing it closer, one step closer to developing a needle-free alternative. So big outperformer. Got to mention Hertz after a 56% record gain yesterday, up another 44% in today's session, just crossing the Bloomberg moments ago. Bill Ackman confirming that 19.8% stake in the company.
All right, Netflix crossing the wire right now. The company basically saying that in its fiscal first quarter, EPS did come in at $6.61 a share. That's a beat. The street was looking for $5.68. Revenue, $10.54 billion, pretty much in line with street estimates. Here's your guidance for the fiscal second quarter. Revenue tracking above a midpoint of its 2025 forecast range. Those are the exact words of the company here. The revenue number, $11.04 billion. The street on average was looking for $10.88, so that would actually be a beat for the full year on the revenue side. The company providing a range, $43.5 billion to $44.5 billion. The street on average was looking for $44.33 billion, Scarlett. So at least on the top and bottom line, it does look like a beat on both what happened in the most recent quarter and their guidance for the current quarter and the current year.
And remember, this is a stock that's done tremendously well. So far this year, it's up almost 10%, beating the broader market and the Magnificent Seven, although it's not a member of the Mag 7. In terms of other things it says about its outlook, it still sees its full year operating margin at about 29%, just below the consensus estimate of 29.2%. And it still sees full year free cash flow at about $8 billion. 88 would be a huge number, $8 billion, when analysts were looking for about $8.5 billion. And Tim, of course, this is a company that is no longer providing any subscriber growth numbers. It wants to get away from that and really put the focus on revenue growth, particularly in things like its advertising business. Yeah,
and trying to squeeze as much money from customers that exist already via advertising and raising prices. What you said, Scarlett, about not changing its guidance, they call that out really at the top. That's a pretty big deal given what we've heard from other companies. And look, this is a company that is relatively safe from tariffs, but I guess there is also the concern that if consumers are going to pull back, perhaps they would pull back on a service such as Netflix. You said they're not providing subscriber data. That's certainly true. What they are providing, though, are numbers when it comes to content. They say that the third most popular English language series ever, Adolescence, came in at 124 million views. And there's just this list of content, a list of shows and movies that show how many people are watching. I mean, if you remember Netflix, this is such a far cry from what it used to do with holding that data so close to it before it offered advertising.
Well, that's what I'm curious about, too. I mean, I know everyone's upset that they're not going to provide the actual subscriber numbers, but I think the fact that now they are providing more details on the actual views of these particular programs, and I know some of those numbers are a little sketchy, but the point is that we can now actually get a better sense of which programs are doing better than others.
Hey, just looking at the press release here, talking about monetization, they say as we deliver more value to members, we refine our plans and pricing to improve monetization to drive investment in future service improvements. They say recent pricing adjustments that they made in large markets, so they're talking about the U.S., U.K., and Argentina, have performed in line with expectations. And they say today we're adjusting prices in France, which they already factored into their 2025 guidance. And they say they continue to make progress building out their ads business. We know that they have incorporated that into an ad-based model as well.
I thought it was interesting, too. I mean, we were talking the last couple of quarters about that push into live events. They talk about now how they basically have WWE 52 weeks out of the year. They also talk about some of the additional expansions that they're making in live sports and other live events like stand-up. And I do wonder if that becomes a little bit more of the core of what this company becomes.
I think it does. I mean, even at the top of this statement, Romaine, they say that the live offering with WWE Raw has been on our global top 10 list every single week. So it looks like that customers, that subscribers, it's really resonating with them. I mean, it was just a few years ago that analysts were saying, no, Netflix is never going to do anything live. They're all about everything on demand when you want to watch it.
They also say they would never do advertising, an advertising and they moved into that.
Exactly.
But to your point, Tim, too, I mean, they also, I didn't watch the Taylor Serrano boxing match, but according to them, they're basically saying, and that was last July, they're basically saying that that was the most watched professional women's sports event in history, in U.S. history. Not necessarily on their platform, U.S. history overall, which says a lot.
It does say a lot.
And some of the other numbers, I mean, you saw, the numbers that you had for adolescents, which you mentioned, 124 million back in action. That was a Cameron Diaz, Jamie Foxx.
That was a good one.
Which I actually watched.
Season 2 of The Night Agent. I walked by Carol's desk. I walked by Carol's desk, and she's watching The Night Agent season 2 on her phone. She just can't put it down.
I'm not. Hey,
was she holding a glass of wine?
Well, you better believe it,
We have
buddy.
wine later, by the way, guys.
Hey, their commentary also, they talk about 2025 revenue outlook assumes healthy member growth, higher subscriptions pricing, and a rough doubling of ad revenue, partially offset by currency net of hedging. Keep in mind that we did see a pop in Netflix, went up about 5% earlier in the week on some reporting in the Journal about, some really upbeat projections for this company over the next couple of years. Talking about $1 trillion, I think, streaming revenue or $1 trillion, valuation, right, by 2030. So
that's the medium-term outlook. What intrigued me with this release, and it's going to be such a contrast to all the other companies that report, is in giving its guidance for the full year, they've said there's been no material change to our overall business outlook since our last earnings report. How many companies can say that in April of 2025?
Not a lot.
Exactly. No material change to our overall business outlook.
One thing I am curious about, though, too, I mean, you see there on your screen there, only up about 0.8%. We came in today with the options market predicting a move up and down of maybe about 8%. This is a stock that's normally pretty volatile. And I do wonder if a lot of that upside was already priced in.
I totally agree with you. I was looking at kind of watching, waiting for it to pop at least 1%, if not more.
Yeah.
And so I agree with you. And that's why I think, that 5% gain that we saw earlier in the week, it was up about 1.5% on Monday. So maybe some of that expectation already built it. And it was up another 1% in today's regular session.
Also, the company specifically calling out international expansion and what it's doing outside of the United States, as Lucas Shaw points out in his write-up of the results. A significant portion of the quarterly letter to shareholders talks about programming outside of the U.S., especially in the UK and Mexico.
Sounds like they kind of front ran themselves, when they gave out their whole 2030 outlook, revenue doubling,
what was that all about?
Tripling their operating income. They're kind of laying out the lay of the land here, and they see a very steady growth trajectory in a way that a lot of companies can. It's a way of flexing.
Yeah, I guess, yeah. And we are talking about a stock that's up 12% just the last couple of weeks alone, outperforming pretty much everything else in its peer group. So,
Squid Game's your favorite, right?
I've never seen it.
I finally
Season 1 was great. I didn't watch season 2.
No, Back in Action is his favorite.
Is that a cooking show? I like those competitions, Chopped.
All right.
Top Chef.
What are we going to do with you? Oh,
Iron
my God.
Chef.
All right. No, it's not a cooking show. All right. That's a wrap. Our cross-platform
Great
coverage.
British Baking Company.
Are you done? Our cross-platform on radio, TV, YouTube, Bloomberg Originals. We call it the closing bell.
I think I would do well on the Great British Baking Show.
We call it Romaine Never Stops Talking.
I don't.
Just kidding.
I don't.
Have a good and safe long weekend, everybody. We will see you again on Monday.